Good evening, everybody. It's Doc here from OnTheMoneyOptions.com. It is Tuesday, January 22nd, the first trading day of the week after Martin Luther King holiday. And we're going to take a look at the technicals. And at the end of this video, I'm going to tell you what I think you need to think about with what happened today. The first thing I want you to look at here is the high-low indicators for each of the major asset classes. As you can see, they're all pretty close to zero, meaning that the high-low percentages hasn't changed for each of the asset classes. This is the S&P, the mids, the small caps, and the NASDAQ. So regardless of what you saw today on the indexes, you can see here that not a lot of new highs and lows that set up in these major asset classes. Moving on to the bullish percent indicator for the New York Stock Exchange, you can see that we're sitting at 39. We're on a column of X's. We're still on a sell signal because the column of X's needs to go above the previous column of X's before we move back to a buy signal. So at this point in time, you can see that we're still in a healthier position than we were when we started at 20. This slide shows the SPY relative strength indicator. As you can see, the relative strength indicator has not quite reached back up to 50. It's at 47.77 right now. I want to see it move back above 50 before we begin to think about more bullishness in this market right at this point. This chart shows the NYSE advanced decline line. What I want to point out to you is that notice that today, if you look at the thumbnail on the right hand side at the top, the little red line that extends down is not very long. So the actual action today was down 1601, which is down 1/3%. Now that's not much for a market that was down almost 2%. So keep that in mind as we move along through this. This next slide shows the SPY rate of change, and as you can see from the lower pane, it is still in negative territory, but it's moving back toward the zero area. Right now it's at minus 5.29, and as long as this stays negative, I'm going to stay very cautious on the market. This slide shows the options equity put-call ratio. This is for equity only. The main part of this is my PPO in the middle of it, and as you can see that it's in the extreme optimism area. This just basically means that there's not a lot of put-call ratio here, very low at this point, which suggests that the market's not too terribly concerned about what happened today. This slide is showing the small caps relative to the SPX. Again, this is sort of our risk on, risk off indicator. Not much movement down today, down 0.28%. But as you can see, well within the range. So there's not a lot of activity going on to suggest that risk was coming off today. This slide is comparing the SPX equal weight index to the SPX. Again, this gives us a little bit of an indication of how much participation all the members of the S&P are taking in this particular market. And as you can see here today, the indicator actually moved up a little bit, and that's good. That means, again, more and more stocks are participating in the movements of the market. The broader the participation that we have, the better the overall results that you'll see. This slide is the VIX, again with Keltner channel, the 2 average true range band around it. Interestingly enough, in all of this craziness in the last day or two, you see that the VIX is pretty low and has stayed pretty low. It didn't react too much today. So we're well within a sort of a normal range here. Again, this tells me that there's not a lot of excitement about what happened today. I want to end this session on this particular chart. This is the SPY, the close, and it also shows the 5-minute chart. What I want you to see here is the volume today was 115 million shares. On an average daily volume, this is over the last 20 days, of 126 million. So today's market was fairly light on volume. You'll also notice if you look at the open and range from 9:30 to 10 that the market was well below that early on and then came back close to the open in range. What this tells me is that this was a light volume day, and I wouldn't put a whole lot of stock in what happened. So tomorrow we should begin to see a little bit more information about what's going to happen, but I would say today was a move without a lot of conviction. So this is Doc from OnTheMoneyOptions.com, and until next time, I'll see you later and stay hedged.